The main purpose is to avoid probate. And in the early days of trusts, the trusts were written, they were called A-B trusts, in order to split a person's estate into two to lower the eventual estate tax to the heirs. But the exemption in the 1990s was $600,000 per person. So if your estate was above $600,000, you would definitely want to split your estate to avoid those taxes. And most of those trusts are written shall or must split. Well, those old trusts today, the exemption today is $5 million per person. Well, most people don't have over $10 million in assets that they're passing to their kids. They may have $800,000, and their old trust is making them split their estate into two parts, which means two tax returns, which means a little harder to get the assets for the surviving spouse from the B trust. I mean, doable, but you have to follow certain rules. Where greater flexibility can be had by just keeping it all in one trust that the surviving spouse or surviving person can use, and then again it passes to the eventual heirs.
Absolutely. Estate planning attorneys generally recommend every 5 to 10 years your estate plan needs at least a review. The estate tax levels have changed over time, and most people don't find the need to split their trust into an A and B trust anymore. If you do have that provision written into a trust and it has to go into effect, it's costly. Each year you have to file separate tax returns. The bookkeeping is much more complicated than just keeping everything in a simple A trust. So if you have a trust that's been written in the 90s or early 2000s, it definitely warrants a review by a qualified attorney to make sure that the provisions written in your trust are either appropriate or that a professional can help you get them up